Constellation Energy down as much as 10% after regulators blocked a power pact between Amazon and Talon Nuclear. This raising questions about future deals between nuclear names and those hyperscalers. Still, Constellation's quarterly earnings did beat estimates this morning. The firm raising its full-year adjusted operating earnings forecast and operating revenue for the period, topping estimates by more than $1 billion. For more on this, we're joined by Daniel Rich. He is CFRA's equity analyst. And Daniel, I want to start on this Amazon Talon power pack getting blocked. Does that fundamentally change what has been a bullish backdrop for a lot of these nuclear plays?
Well, first of all, thank you for having me. And the answer is maybe. It certainly is a setback because the industry was looking for what's called this co-location agreement, where the nuclear plant and the data center are side by side, as perhaps a path forward to build out more and more data centers at speed and at lower cost. And so this rejection by FERC is potentially a roadblock and potentially making us have to rely on the older model of building out the data center further away from the nuclear plant and having to build out more infrastructure, which is more costly and time consuming. I think the rejection is just the first step, though, and potentially a much longer process. As you mentioned, the decision was split, and the commissioner actually was dissented on the decision. So I think it wouldn't be surprising for there to be a petition and a rehearing here shortly.
Daniel, just given the fact that this is something that could play out now for several months and maybe even beyond that, I guess how big of an overhang then do you see that being on these stocks, given the fact that this could be a fundamental game changer here for the industry going forward?
It's a little bit of an overhang in the near term. It certainly adds a little bit of uncertainty, and it's part of the reason, of course, why we think Constellation Energy and Vistra and Talon and similar nuclear operators are down today on this news. Overall, though, we're still pretty favorable on Constellation and the peer group, just due to some of the trends I've talked about in data centers and AI and rising power demand expectations. So we think that it wouldn't be surprising if we see a recovery over time in the share price if we get a more positive regulatory development, as this rehearing most likely occurs probably in the next month. And then we hear more from PJM region and potentially Talon or Constellation. They're currently on their earnings call as we speak. We might get some more clarity from their commentary.
And Daniel, you might have heard me mentioning that I spoke with Amazon last week specifically about their plans on nuclear, and it sounded like they were bullish on this idea of utilizing nuclear to create more energy, not to divert it away from existing needs and energy sources. Do you think that kind of difference could determine the path of legislation and regulation moving forward here, so long as these tech companies are investing in things that could create excess energy instead of diverting it? Could that pass muster with these regulators?
Yeah, it's a very good question, and the answer is I'm not sure yet. It's kind of a hazy concept. The FERC decision made it sound like that they think the extra cost and the grid reliability concerns was a reason not to pursue this co-location idea on a large scale. But if you read the decision, it's pretty murky. There's really not a lot of factual detail or proof as to how that would happen. So I think really it's more likely over time that we see a bigger push to allow a co-location deal despite the grid reliability due to economic development. And so I think the grid will ultimately find a way to meet the electricity needs.
Do you see the election playing any role in the path forward for regulation on this?
It's possible, but we do think nuclear power really is in a more favorable position when it comes to the election tomorrow compared to other areas of clean energies. It's been spoken about earlier on the show, wind and solar and other tax credits that could be in the crosshairs potentially under a second Trump presidency, or if there was a Republican sweep in the election. But we do think nuclear has a lot of bipartisan support right now. It's our understanding. And no matter the outcome of the election, we think that's going to be a fuel resource that's going to be more favored going forward.
Daniel, let's zero in specifically on Constellation, talking about just the stock performance, the sheer outperformance that we've seen in a name like this among the top performers in the S&P this year. Its stock more than doubling since the start of the year. When you talk about the fact that, and taking into account the CEO's commentary this morning, just about the fact that the AI importance can't be overstated right now, what does that tell us just about future growth here for Constellation and how big of a leader or dominant position they do have in the industry?
Right. So, obviously over the past several quarters, there's been a debate basically going on about how much electricity needs are we going to have due to AI? Is the hype real or not? And I think what we're starting to see quarter after quarter is that this demand is real. And data centers are becoming a larger and larger component of our country's electricity needs. And Constellation, obviously, as you mentioned, is by far and away the largest nuclear operator, more than 3 times more megawatt capacity than the next competitor. And we think that, in our view, nuclear is really one of the best ways to service this type of demand from companies like Amazon, Microsoft, Mag 7 names that have large needs for power. They also want to do it cleanly with as few carbon emissions as possible. So nuclear is a very logical option for them. And so Constellation, although the shares are down today, of course, we maintained our buy rating on the stock. We lowered our target price to 280, but we still think it deserves this strong multiple and has likely factors for it to outperform given the AI trend. But also internally, if you're looking at the business, they're growing margins, they're growing earnings at a very fast clip, and the free cash flow that they're generating is really supporting share repurchases and dividend growth at a much faster rate than we see among other peers in the sector.
Given that a lot of these names are dipping today, you've got Constellation, Vistra, a lot of the names that you covered down. Of the names that you cover, which dip is the most viable today for investors who are still bullish on nuclear?
I think Constellation is the most viable dip. I think we see Vistra's down a couple percentage points here. I see on your screen here, and Talon. Constellation with a 10% dip, it really to me looks as more of like a profit-taking type of activity, and more than an actual fundamental devaluation due to the Talon agreement. You have to remember also with Constellation, their agreement with Microsoft on 3 Mile Island to potentially restart the Unit 1, that is a more traditional, what's called in front of the meter agreement. It's not a co-location agreement. And that really allowed them to raise their long-term earnings projections by a significant amount. So despite whatever happens with the decision, we think Constellation is in a pretty good spot, and today's dip is most likely viable for that reason.
All right, Daniel Rich, great to get your insight here this morning, CFRA's equity analyst. Thank you.
Thank you.